It's time for a bit of business news now, and joining us from The Australian is its economic editor, Adam Creighton. Adam, good morning to you. Thanks very much for joining us as always. So we'll start off with your piece in The Australian today. The Treasurer must really be thankful for the housing market at the moment.
And iron ore.
Yeah, and iron ore, yeah.
Well, certainly thankful for the Reserve Bank anyway, which of course seems to have electrified the housing market. I mean, I'm sure you're referring to those extraordinary house price increases. So in Sydney this month, I should say last month in November, a 2.6% increase in the 1 month, which is the fastest increase in more than 30 years. And indeed, all of the state capitals advanced in November, which doesn't happen very often. Even in Perth, for the first time in 2 years, prices have bounced back. So it really does seem that those three rate cuts, while they don't seem to have had much effect on business investment or household consumption just yet, they certainly have had a big impact on house prices.
So just to pick you up on that, so that's where they believe, is that where the Treasurer believes that those tax cuts and those rate cuts are going, so that people are spending it on their mortgages and their houses rather than in retail?
Look, I mean, the evidence of the tax cuts is that they haven't really had much effect yet, kind of one way or the other. Kind of the money's just kind of vanished into the ether, if you like. The conventional wisdom is that it's been used to pay down debt, but certainly retail sales have been very soggy. I mean, it's worth pointing out that the house price increases are based on very low turnover still. So turnover in the housing markets is at a 30-year low. So it's hard to pinpoint who's actually doing the buying and selling. I would probably guess that it's at the upper end of the market, I would say, rather than the lower end, but we don't have those details yet.
Yep, that's true. Adam, looking at Deloitte Access Economics, and they essentially did their own budget. It's remarkable. And Chris Richardson is great. He's like a super nerd that we love to have on here once a week.
He's extraordinary.
Now, the report will be launched later today. But how closely aligned do you think it will be to what we see in MyEFO, for example?
Well, look, fairly closely aligned to the April budget, I think. So Chris is thinking, Deloitte is thinking that the surplus this year will be $5.3 billion. Now that compares to $7.1 billion that the government has in its forecast at the moment. So Chris thinks that there'll be a write-down of about $8 billion over the next 4 years. Now that is largely because the price of iron ore and coal has been dropping off fairly steadily. I mean, the government has enjoyed successive waves of revenue upgrades over the past few years. It's been extremely lucky. The price of iron ore earlier this year was $125 a tonne. It's now back to around $85 a tonne, and it's forecast to fall further. And now, if you just think of that in terms of tax revenue, between 2016 and 2019, the annual company tax revenue has gone from $62 billion to $95 billion just in 3 years. So that is an extraordinary increase, which has basically all come courtesy of our commodity exports. So the problem is now that is going to start to unwind. So we could even see a reduction in the annual company tax take over the next few years.
What about developments with the RBA, Adam? Because I was reading comments from the Governor on the weekend that suggested that he was not going to go towards quantitative easing, and I feel good about this because I finally understand what quantitative easing is. This is after suggestions that they would go towards QE because the rate cuts are tracking towards zero.
Yeah, well, for someone who's not going to go there, it was certainly a lot of talking about it, I must say, in that speech. It was a long speech, and it kind of outlined in great detail the circumstances under which the RBA would pursue that. The Governor himself said that he wasn't going to do it, but interestingly, after the speech, the financial markets immediately priced in a greater likelihood of quantitative easing by the end of next year. But just on the short-term agenda, the RBA meets tomorrow for the final time this year, and it's not likely to change the cash rate, but certainly it's going to leave the door open for a February cut, which is the next time it meets, and so that would bring rates, of course, to 0.5. And now the Governor said in that speech that the rates would have to go to 0.25, but before he pressed the button on QE, and that would likely be some time away. So we'd have to wait and see. But the national accounts on Wednesday, I think, really are critical because that's going to colour the view of the economy over summer. Basically, it's, I suppose you'd say, the last big critical piece of data this year. For the third quarter, the slowdown in growth in the second quarter was a real shock, I think, to everyone. It was 1.4%. So there's an expectation of a modest improvement to about 1.6, but it's worth pointing out that if it is 1.6, that's just the same as population growth. So therefore, per capita, there's no growth at all.
Oh, so those figures on Wednesday, we'll see them.
That's right.
So they'll be pretty grim, do you think?
Well, look, probably. I mean, I don't have a forecast. The market forecasts are between 0.3 for the
Why
quarter
not? Is it broken?
and 0.6. I don't like forecasting. They're always wrong.
Yeah.
But look, I don't think it's going to be strong, though. So it's not going to be good news for the government, I don't think. That's why they're so happy about these house prices today. But,
right.
but look, of course, that's only good news if you own a house. I mean, remember, 1/3 of households don't, so you know they're still trying to get into the market.
So how does it shape the next budget then? I mean, MyEFO is one thing, the mid-year economic update, and that'll come in 2 weeks or so.
Yep.
But you know, there's calls for these tax cuts to be brought forward. Is it now looking more unaffordable for the government, or is it looking like they need to do more to stimulate the economy? It's a bit of a catch-22.
Well, it looks slightly more unaffordable if Chris's forecasts prove right, but I still think that by the time the budget comes around next year, they will be thinking about bringing those tax cuts forward. I think the economy will still be soggy, it'll still be weak, and those calls won't go away. And it does seem like an obvious thing to do, to bring forward at least the 2022 cuts to start, say, 1st of July next year. That would be significant stimulus for the economy, but by and large, I don't expect the government to change much over summer. It's been fairly stubborn. I know it brought forward that $3.8 billion of infrastructure, but you know that was, I think, largely politics. It's a fairly small amount of money, so they don't really want to do anything that would jeopardise this surplus this financial year, because they put such great political store in that.
Okay, Adam Creighton, economics editor at The Australian. Great to have you on the show this morning, as always.